This is the Global Economic Scrap Metal Commodities and Recycling Report by BENLEE Roll-Off Trailers and Open-Top Scrap Trailers, June 17, 2019. U.S. steel production fell to 1.875 million tons, a multi-month low on less tariff protection and slowing global demand. Oil fell to $52.80 a barrel, remaining near a multi-month low despite all the shipping problems we're seeing with Middle East tankers. U.S. oil production fell to 12.3 million barrels a day, near the all-time record. That's great for U.S. jobs. Iron ore rose to $112.50 a ton, a 5-year high on concerns about Brazilian supply disruptions. Scrap steel number one HMS was steady at $235 gross ton, a multi-year low on a slow-growth economy. But there could be upward price pressure due to the high iron ore prices we're seeing. Hot rolled coil steel fell to $27.07, a multi-year low on pressure from imports and slowing demand. Copper rose to $2.63, near 2-year lows on global slowing across the U.S., Europe, and especially China. Aluminum fell slightly to 78.6 cents, a multi-year low on global slowing, especially automotive. Cardboard scrap fell to $35 a ton, again a multi-year low on slow global demand. The U.S. government budget for May had incoming receipts up a very strong 7%, but spending was up an outrageous 21%, bringing the one-month deficit to $208 billion, with $147 billion spent on medical Medicare, $88 billion on Social Security, $65 billion on defense, $48 billion income security, $40 billion on interest, I repeat $40 billion on interest, and that brings higher deficits, which brings higher interest rates for all of us. Higher government interest means less they can spend on other things like R&D. Lastly, it's easy to have a good economy when the government is borrowing $208 billion in 1 month. That's $640 borrowed and spent for each U.S. person. China's May industrial production increased 5% versus last May, the weakest factory output since 2002 amid the escalating trade dispute between Beijing and Washington. Mining output and ferrous metals actually grew faster. May's Chinese vehicle sales, a market about 50% larger than the U.S., dropped a huge 16.4% to a rate of 22.92 million as tariffs continue to hurt China and hurt U.S.-made exports of vehicles that we ship to China. May's U.S. inflation fell to 1.8%, driven by lower energy prices. Excluding food and energy, core inflation fell to 2.0. May's U.S. retail sales rose a nice 0.5% from April as vehicles, building materials, online sales, and gasoline sales all rose while clothing sales fell. Growth was actually 3.2% versus last May, down from April's 3.7% rise. June's U.S. consumer confidence fell slightly, but remains high. Consumers are concerned about the effect of higher prices and lost jobs due to the tariffs and their effect on the slowing economy, as well as reduced expected gains in employment. May's U.S. industrial production rose 0.4% as manufacturing output increased for durable goods, wood products, machinery, and vehicles. Utilities and mining actually rose as well. Wall Street's Dow Jones was up 106 points to 26,090 on continued soft data out of China, but on good U.S. industrial output. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.